Investors, home buyers, beware. Don't make this mistake. I'm seeing this mistake made all over the place. So avoid disaster on your real estate investment purchase. Avoid disaster on your real estate purchase in general by not making this mistake that I'm seeing happening, quite honestly, more often than I ever have. Let me set the scene for you. I get a client who's referred to me from a great real estate agent I work with. They text me, "Hey, Matt, it's so-and-so. I was referred by so-and-so. I'm looking to buy an investment property. Can you chat?" Sure. I can call you after my 10:30 meeting. Here's a link to the online application if you want to get that started. If not, we'll just talk. I call, I miss the client. I'm trying to set up an appointment, and they send me this response. "Hey, Matt, we're driving an hour and a half from where we live to look at properties on Monday. No need for an application. No need for any of that stuff. We're going to go see if we like these properties as investments. Then we'll get with you to review the numbers." Now, here's where, as a mortgage advisor and an investor myself, I have to advise. And I say, listen, I'd love to do some numbers first before you make an hour and a half trip, because I know as an investor, the numbers matter. And what this client, I kind of learned through this was doing, and I've seen it quite a lot, right? And that's why I'm making a video on it, because I want you to avoid this, is they've got a rough idea of what it might look like. They're going to go look at real estate, and the real estate they're going to look at, yeah, we see this as a nice neighborhood. We're probably going to see future appreciation. We know that, this part of Sacramento is growing, and this property is going to be worth double what it's worth now in 15 years. Rents will go up as they do over time. But what they're missing is the analysis that I think needs to be done up front. And what they might run into, because I know the neighborhood they're looking at really well, is they're going to find some great properties. Go, oh man, like stuff in this neighborhood sold for 600. I can get this place for 500. It's in pretty good shape. It only needs about 10,000 and kind of touch up, and I can get market rents for it. Here's what they should be doing. And I'm going to share a spreadsheet that I go over with investors all the time. Investors are putting 20 and 25% down more often than not when they're buying a single family. Today's current rate environment, 20% down, they're probably going to have a rate in the mid sevens on an investment property, even with paying a little bit up front to buy it down. And even if they put 25% down, they're still going to be above 7%. Again, depending on when you watch this video, rates may have gone higher, they may have gone lower, but this is the conversation we're having before real estate properties are being viewed. If you have this $500,000 house and you put 25% down, after all costs, you're in this thing over $130,000 in capital, and you've got a 3151 payment, this home would not be a great rental property if rents in that neighborhood were $2,800. You can't collect $2,800 in rents, have 3151 in monthly mortgage payments, and 130,000 in capital deployed, and call that a good investment. The cash on cash return would be red. It would be in the negative, right? And so this conversation and these numbers are step one. The real estate's not step one. And if you have these conversations and it's like, hey, I've got a bunch of stock, I'm an engineer, I want to diversify, I want to put some money into real estate. Okay, maybe all that cash you have means that you're in a great position to put 40% down. And you put 40% down on this thing, and the rate probably honestly gets a little bit better. The payment is obviously lower. And who knows? Maybe this is a neighborhood where it rents for $3,000 or $3,200. And even with some deferred maintenance, it's a break even. You're going to get a tax benefit. You're going to get the debt pay down from the tenant paying the debt down. And of course, you're going to get the appreciation over the years. I saw something recently, and it's kind of interesting how they phrased it, where just real estate will double every 15 years. It's kind of true if you look at a lot of 15-year periods, right? So you might expect this to be a $1 million property 15 years from now. Certainly over time, when you take a long enough time horizon, real estate does nothing but increase. I know. Spur the comments where they're telling me it doesn't go up every year and there's certain years where it's gone down. Okay, I hear you, but I also hear you that give me any 20-year period where real estate was cheaper 20 years later. You really can't do it. Like, real estate crashed in 08. That, purchase, if you made it in 1988, was after the crash still worth double what you paid in 1988. So anyhow, back to the lesson. Real estate in general is, if it's primary residence, you've got a budget that you want to stick to, and so the numbers come first, right? Because of your family and your lifestyle and your budget, that matters. If you're an investor, it matters as well. I don't want to say more or less, because I guess different people are in different situations. Some investors like, hey, I can break even, no big deal. Other investors, these numbers might be totally different. If you're buying a property in some of the states that don't appreciate as much, but you want to have $400, $500 per door of cash flow. Nonetheless, it still drives me a little bit crazy. And it's probably why I wanted to make this video, how people will go out there, look at real estate, sometimes bid or offer on real estate, and then do the numbers afterwards. Especially this is common, and this is a common misstep for people who know they qualify. Okay, you make $400,000 a year. You're an engineer. You've got no debt. You know you have great credit. You're going to qualify. I get it. But an application and some supporting docs and a soft credit pull allows me to give you some really tailored and accurate estimates, not to tell you that you qualify, not to say you're good to go, you can write offers, and here's your pre-approval letter to frame on your wall. It's so that you know the numbers, because the numbers come first. One day in this great nation, some of the stuff that fellow lenders have preached will come true. And your real estate shopping will begin with the lender, because I'll continue to preach it, and some will listen and some won't. Getting yourself pre-approved, dialing in your numbers should come well before home shopping. Home shopping's the fun part. The numbers for a lot of people isn't as fun, but it's necessary. So let me know if me and my team can help. More than happy to. Go to greatmortgagebroker.com, fill out that quick form. We're licensed in 48 states. That Excel spreadsheet is one that I use for all home buyers, whether you're buying your first primary residence, your 8th rental property, single family duplex, fourplex. That Excel spreadsheet allows you to run numbers. And let me pull it up real quick one more time, just to show you that while you're doing this, you go, you know what? What if I bought in this area? I know I can find something for $385. All right, my payment's about $2,000 all in, but I don't want to put 40% down. What if I put 30% down? Okay, my payment's $2,297. These are the type of things that I give buyers. This Excel spreadsheet, I empower through education. You do the research, you do the numbers, you find out what net rents are, talk to other investors in the area, look at the age of the house, and talk to other real estate investors and people that might say, listen, this place is built in 1926. You probably got to account for X number of dollars per year in CapEx, expenses, things to keep the property updated and a good, be a good landlord, provide good quality, clean housing. So that's my spiel. Thanks for watching. Again, greatmortgagebroker.com. Connect with me and my team. We're more than happy to help. Talk to you soon. Bye-bye.